ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, everyone. Happy Monday, or it might be Sunday evening, wherever you are in the world. Welcome to the start of the week with the Daily Currency Call presented by Forex Trading Asia. Good to see we've got some members from the LCMS Traders Club in watching the call live as well. And if you are looking to catch the call live to interact with us as well, make sure you visit the Jindal Thai website. We are taking on new members as well. So over the weekend, if you have been following the news, you would obviously be aware that really there's no conclusion to the situation with the Ukraine-Russia developments as well. So markets are they're very jittery still, just from what I've noticed to start the week off. We do have Aussie and Kiwi in focus with Jin today. We've got the DXY and equity markets with myself, and we've got Kim Hong here presenting his summary in regards to a preview of the RBA rate decision and meeting for tomorrow morning that's taking place. Now, before we get into the call and present the trade ideas and other insights into the Forex markets, I'll just share the risk disclaimer as well. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. And feel free to ask questions as well if you are catching the call live too, with the Aussie and also the Kiwi pairs in discussion today. So just to kick us off, we do have a pretty significant event for the Aussie tomorrow with the RBA interest rate decision and also the statement too. So Kim Hong here will go through a preview of that meeting, and I will pass it over to you now. Kimmy.
All right, thank you, Scott. Happy Monday, everyone. Hope you guys have a well-rested weekend, okay, to prepare for this another new week of trading. So tomorrow is the first day of a new month, okay, and normally, okay, during the first week of the month, we usually will hear from the Reserve Bank of Australia, okay, in terms of their monetary policy decision, okay. So tomorrow they will be meeting and they will be announcing their monetary policy decision at 11:30 GMT plus 8. Okay, so just a recap. Previously, what they did was they actually ended quantitative easing. Okay, which was pretty, I would say, hawkish. Okay, if you guys recall that they actually have several options. Okay, back in the 2 meetings ago when they were actually talking about it. Okay, they actually have they're trying to explore, I think, up to 4 options. One of them being to end QE. Okay, one of them being to ease QE by a little, and then the other one being to hold it unchanged, and another one would be, to cut a little and then delay for a few more months down the road before making any further revision. Okay, so in the end, out of the 4, okay, they actually chose the most hawkish one, which is to end QE at one go. Okay, so many of us think that many of us think that this is actually a good thing, a hawkish move from the Reserve Bank of Australia, which is true. No doubt, it is a hawkish move. Okay, but the central bank governor, Governor Lowe, okay, Philip Lowe, actually also mentioned that an ending of QE does not necessarily mean that a rate hike is coming soon. Okay, so it's just wanting to not wanting the market to go too excited over this whole monetary policy tightening, the potential of a monetary policy tightening from the RBA. Okay, so because of that, the whole meeting, okay, the previous meeting, okay, was actually considered as a dovish ending of a quantitative easing. Okay, ending quantitative easing is hawkish, but then the central bank governor actually warned that don't be so sure that an interest rate hike is coming. Okay, so adding a bit of a dovishness there. All right. So this time around, okay, tomorrow during our meeting, what can we expect from the RBA? Unlikely, okay, the central bank is going to hike rates for 2 main reasons. Okay, first of all, inflation. Okay, the central bank will definitely want to wait for inflation to be to be at this high level at least, okay, for for probably for a longer period of time. Okay, no doubt inflation in Australia has risen recently, okay, but this is apparently not long enough, okay, not sustainable, okay, not that well sustained yet, okay, from the RBA's perspective, okay. So what the central bank wants is to see inflation to be at a high level and eventually coming down, okay, to the 2 to 3% target range for a longer period of time. Okay, like just like how the US inflation has been rising so high for probably close to a year. All right, and the Federal Reserve, okay, decided that, what, we don't think that this whole inflation is transitory anymore, okay, which is why they start to act, by trying to clear out QE as soon as possible and looking at several rate hikes this year, okay. So similar approach may actually be taken up by the RBA, okay. So right now, inflation, yes, has been risen in Australia, but it's not extreme yet to the point whereby the central bank has to carry out, emergency rate hikes to actually tone down inflation. Okay. Moreover, now that with the quantitative easing ended, okay, the central bank will definitely have more flexibility in the near future, in the next few meetings. Okay, if there's a need to hike rates, they can do so. Okay, because QE has ended. The next move will be, to clear out the bonds and then to increase interest rates. Okay, so that's the first reason why the RBA is unlikely going to hike rates, which is they want to wait for longer high inflation. Okay, wait for a longer period of high inflation. Now, the second reason is that wage price index has to rise further. Okay, the most recent data release, I think it was last Tuesday or last Monday. Okay, it was last week. Okay, it shows I think the figure was not any greater than the previous release, okay, on a quarterly basis. All right, so the quarterly basis okay, the data has been released on a quarterly basis, okay, but the annual wage price index figure was actually not any much higher than the previous data, okay. And Governor Low, okay, together with the RBA as well, has been reiterating over and over again that one of the main conditions, okay, for the central bank to increase interest rates is to see a rise in wage price index, okay, before they will actually consider, right? A rise is not just a micro rise, small rise kind of thing. It must be a rise of a decent amount, okay? And based on the data, okay, for the past few years, the current level of the wage price index is actually at the at a low level, which has been so, okay, for the past few years already. Okay, so if, okay, for the next 1 or 2 quarters down the road, wage price index were to rise way beyond the current level, that will definitely put interest rate hike this year back on the table again. Okay, I mean, not that I'm saying rate hike this year for the RBA is definitely off the table right now, okay, but to actually speed things up a bit, okay, for the RBA to increase interest rates this year, we will definitely need to see a higher wage price index, okay, and we can also expect maybe the next 1 or 2 meetings, okay, for the RBA not to actually hike interest rates as well, okay, because like what I said, the wage price index data is being released on a quarterly basis, okay, so the next time round is going to be released is probably in May, okay, and if the results in May is going to be good, then good for the RBA, okay, good for those who are looking for a rate hike by the RBA, okay, but then it's only until May then we'll be able to know how things progress, okay. So this time around, no rate hikes. What can they do? Okay, what can the RBA do during this meeting? Okay, the statement is likely going to remain pretty much unchanged, okay, but the central bank is more likely to highlight the economic progress in Australia. Okay, that's one thing. Second thing, they will likely, okay, be explaining on how this whole geopolitical tension between Russia and Ukraine will have an impact on the Australian economy and things like that. Okay, although they are pretty far apart, but because of all these indirect moves, indirect factors that may actually be affecting the Australian economy, Australia's economic recovery. Okay, the central bank definitely will be paying attention to the developments of this geopolitical tension. Okay, so even if they were to talk about these subjects matter, okay, unlikely it's going to move the Australian dollar much. Okay, in a scenario whereby unless the RBA were to highlight something that may lead to a potential change in decision. Okay, say for example, maybe something that the RBA mentioned to actually hint at no interest rate hike this year. Okay, but at the moment, the sentiment, okay, the market sentiment is that the RBA is still hopeful, okay, looking towards a interest rate hike this year, probably later half of this year or maybe the fourth quarter, okay, because we need to see we need time, basically time, we need time will tell, okay, because right now inflation is rising, and for the RBA to be convinced inflation will have to rise for a longer period of time, and then which price index will have to rise further as well. Okay, so at the moment I would say tomorrow's meeting will be expect a not an uneventful meeting tomorrow. Okay, but nonetheless, all right, I will be in the Echo Fin chat room to actually break it down if there's any surprise. Okay, well, actually, you know what? Since the meeting will be out tomorrow at 11:30, okay, and it actually kind of like clashes with our currency call. Okay, we may actually be doing a ad hoc switch, like how we did in the past, to the RBA statement or to the other central bank statement like RBNZ and things like that, and then to take a look at if there's any surprise being thrown out by the RBA. Okay, so with that, any questions on the RBA meeting? Okay, so if there's no questions, I'll hand it over to Scott now for his analysis on DXY. Over to you, Scotty.
All right, thanks, Gimme. And what I'll do, guys, is just to start, I will just go through the price action on the US dollar index as well. So we've got the daily time frame up here now, and we very much did see a pullback, and then we've seen the sentiment sort of come back to the US dollar as we're back through 97 flat. We're currently trading at 97.35. It's been very much a flip-flop in risk sentiment. We saw on Friday's session, we can see how the US dollar behaved, that equities did push higher. Now, the reality was that there just wasn't any significant development, so it just seemed that people were happy to flow back into stocks and buy the dip after that Thursday invasion that took place with Russia into Ukraine. But after that, we did see a little bit of settling, but really what we are still seeing, and even today, is that price is pretty keen to push well beyond that 97 resistance level. And just having a look now, we've got Bitcoin down a little bit, we've got Ethereum down a little bit. I was monitoring the markets this morning in Australia, and as you can see, this is what we've got going on here. So the Friday candle, this was before the US session, obviously, from a daily perspective. We haven't really seen a lot of follow through. So we're holding above 7,000, which is proven to be a bit of a significant psychological level. But frankly, there's not much happening in regards to a trading real conviction on anything. We're seeing gold chop around a little bit as well. I try to get a read on this for trading some gold stocks. It's quite a lot, even out of Western Australia. But as you can see, we had the spike up and then we had the pullback, and we're just above 1900, a little bit over 1900 USD an ounce. And then also oil, because that's a bit of a factor. That too is pulling back a little bit too after it did spike. So I'm just trying to get a gauge on what is stronger, and it's not particularly clear. because we see sort of jumps in the price on either one and then pullback. So still just a little bit unnerving to sort of just climb into a stock long, because everything is sort of pulled back. So the short side is also not really clear as well. So I'm just waiting to see what later today plays out. I have been sharing some news as well in regards to developments as to what has been going on, and it's just sort of stable right now. We might see Joe Biden speaking soon too, but we'll have to wait and see on that. It was reported 11:15 a.m., but I think that was Washington time. So that should really be quite soon, but that might have been delayed potentially if there's some other developments going on as well. So from a economic calendar standpoint as well, I'll just share this. So for the US for later today, 10:45 p.m., that's GMT plus 8 time zone. We've got the Chicago PMI, and nothing really noteworthy outside of the Ukraine and Russia situation. So I think the US dollar is just going to wait and see if maybe they can work out a meeting point, the president of Ukraine and also Vladimir Putin out of Russia, just to see if there can be some sort of talks initiated with the face-to-face meeting, but we're still waiting to hear some details and the location on that. So we very might well see, with uncertainty, we'll see probably the US dollar just creep a little higher. Gimme went into detail about the Aussie news coming out tomorrow. And then for Tuesday, we do have the ISM manufacturing PMI. But for now, just with the lack of clarity, it's just a little bit tough to say with confidence, to take a trade on the US dollar. I mean, I would prefer to see it sort of close for today and then come into tomorrow with a little bit more clarity, just based on how the daily candle closes is what I'm sort of looking to do, but there's no open positions currently for me, guys. So that is it for the US dollar, and a little bit of equity summary as well. Now we do have the Aussie and also the Kiwi, which are definitely some talking points just with the risk sentiment shifting around quite a lot. So we've got Jin here now just to talk about the Aussie and the Kiwi. So over to you now, Jin.
Thanks for that, Scotty. And did you all see that big gap in the markets on Monday morning? 100, 150 pip downward move, big, huge gap. That's also, why we say that on Friday, we actually said, don't hold your trades over the weekend. If you were selling, then, you might have a happy surprise, but we never knew which way the gap was going to appear. So with that, that big gap was with all the news that happened over the weekend. What we could be looking for now is into the Aussie dollar on the H4 time frame here. As Kim Hong was just sharing with you, we are possibly looking at, or it's most likely that the RBA is not going to increase rates, which could mean that, as Scott was just sharing with you as well, dollar index gaining some strength. So we see now that the Aussie dollar has been tracking lower over the last 2 candles on the H4 time frame. It's been tracking lower. It's now coming back towards that 71.64 level, the 0.7164 level, looking to test again. Same thing like what it did on the 24th of Feb, tested lower but rebounded, looking for it to test lower again. What I would say here is not a trade for today, but something for tomorrow. Look for that selling opportunity if it closes below that 7138 or 7134 level. If it closes below that point, to coincide with the RBA not increasing rates, we could see that downside. I'm not so sure it moved at 126 pips towards the downside, but you can put your take profit there. I would say that you would have an opportunity at about 50, first at 50 pip take profit, and then again at about 120. At that point, your stop loss should be no more than 30 pips. All right, so you're looking at a 1:3 risk-reward ratio at the very best, or at least a 1:1, or maybe a 1:2 risk-reward ratio towards the downside, towards that previous low point of 4th of Feb. At about that point, you're looking at a 1:2. The recent low point of 14th of Feb, you'll be looking at a 1:1. In the best case, a 1:3 risk reward ratio towards the downside for the Aussie dollar on the H4 time frame, given that the RBA doesn't surprise the market with a rate change or rate hike, that they keep to their no change view, and then also with the view that the dollar continues rising, that conflict in Ukraine continues. With the uncertainty, we'll see that move towards the US dollar. With that said about the Aussie dollar, the next one is the Kiwi. Last time we spoke about the Kiwi, we said that if it closes above that 6750 level, you could see it track up towards that resistance. It came very close. It came to about 6800 or 6808 before turning back down. So if you jumped into that trade, you would have closed out there. At this point, again, looking for it to track lower. I think that if I were to move this line down just to make it a bit more visual, same thing like the Aussie dollar, you would be looking for it to close below this point. Same like what it did last week. Look for it to close below that 6662 level or 6660 level. Again, stop loss very tight at this point, 20 pips stop loss. Take profit could be 100, but I would say a reasonable one would be about 60 pips. You're looking at a 1:2, almost 1:3 risk reward ratio towards the downside. Not a trade right now. It needs to go lower. It needs to close below that recent low point before you can see it track towards that low point of 14th of Feb. I think comparing the Aussie dollar and the Kiwi dollar, I would rank the Kiwi dollar a little bit higher at this point, leaving the Aussie dollar for tomorrow with the RBA rates decision or indecision, and then we could see two moves on both the Aussie and the Kiwi dollar. Short and sharp. With that, back to you, Scotty.
Thanks for that, Jin. And just remember, guys, that we will be in the LCMS Trading Club forum as well for any questions, and we'll also be sharing any more updates as well from the Ukraine and Russia situation, and also any other developments within the charts. So please stay tuned for anything that does pop up. And again, please just remember to trade safe as well. And when in doubt, just ask questions. We are here to help for anyone that is in the club as well. So thank you for joining us today, and hope to see everyone tomorrow for the Euro analysis. Bye for now, everyone. Have a great rest of your day.